All right. So tip number 7, utilizing a small business retirement plan. I'm going to dive into this. This is kind of my spot to shine, but Drake, anything to add? You obviously you're a CPA, you don't do investments, but this is kind of like
Yep.
how to get massive returns. Any thoughts or things before I dive into this whole, like, how do we reduce taxes using a small business
I,
retirement plan?
I'll just tell one anecdotal story. So we had a client that I've worked on in the past. They're over the age where they can do catch up contributions. And this husband and wife, small business, they ran an insurance company, put away 80 grand in 1 year. That is an investment that goes to them. It's theirs to pull out at retirement. It's going to grow tax free. And they got an $80,000 deduction for it.
Yeah.
So
Yeah.
these things are effective. They can be a great way to save tax money. And, we're talking money right off the top. I mean, it's an instant return the day you put that money in there. So
Yeah.
I love these things. Continue, Rob, but I'd love to
Yeah.
hear what
So,
you said.
so long story short, guys, the IRS knows that there's going to be a whole bunch of people getting too old and they don't want to have to fund their old age living. Right. And so what they do is they provide in the tax code an opportunity for businesses to help people save for retirement. And there's 2 levels of it. Yes, they help the individual. Like when you were working at remember when you had a job and you had a
Yes.
401k that they would match, right? You'd say, okay, I can match up to 4%. I can take 4% of my $100,000. I can put that into a 401k, and that's my employer contribution. Then what happens is that's my employee contribution. I'm the
Yes.
employee. I make a contribution. Then the corporation, the IRS, it says, companies, we'll make a spiff for you if you help them save for retirement. So we make the employee, but the company can make an employer contribution. The employer contribution has a bunch of limits, but here's the most important thing. The money that goes from your corporation or company, so Schedule C or an s-corp, they both have a way to do this. You can take from your company and put directly into an account for you. Now, you can't touch it. There's rules. You got to wait till 59 and a half. You got to do it's a retirement account. But essentially, that avoids the 15.3% self-employment tax. So let me fast forward this a little bit. In small businesses, you have access to a regular 401k. You can set up a 401k. If you don't have any statutory employees, which means you don't have employees in your business that are W-2 that are not owners of the company or family members. And again, this is not legal tax advice. You got to go check the fine print on everything. Go ask your investment advisor about investments. Talk to Drake about this to get specific advice for you. But if you don't have employees and it's only you and maybe your wife and your kids and your co-owner partner, that means you don't have statutory employees. If you don't, you can utilize what's called a solo 401k or an individual K. Now, this is not an endorsement of them, but Vanguard has a phenomenal individual 401k. So let's just say you're a pressure washer out there. You don't have any employees, you got a couple of subs that work for you, and you're hammering and you want to make a big old tax deduction. You're looking for the best tax deduction at the end of the year. In this solo 401k, you can take up to 25% of your s-corp salary or up to 25% of your Schedule C net profit and make a straight employer contribution. So if you made $100,000, you can put $25K, and that avoids the 15.3% self-employment tax. So essentially, it's a straight line deduction in the business that goes into an investment account that will grow tax deferred till you're 59 and a half, and you essentially get a 15.3% return instantly because you didn't pay self-employment taxes on it. And that's what people don't think about. Now, Drake, I'm a business, so I've been killing or eating what I kill for almost a decade now. I'm an entrepreneur at heart. I got Feedback Ranch, web design. We do web design and marketing, right? And I help Drake with this whole thing. Entrepreneurs are always like, oh, I don't want to invest in the markets. I don't want to do that. And I hear that. Drake, do you hear that from other people?
100% all the time.
Okay. So here's my advice. Okay. Ultimately, I know the best ROI on my money is my business. Absolutely. That being said, if you've ever met a 60-year-old dude working because he didn't save In fact, his accountant set him up as an S-corp and didn't explain to him that because he's paying less in self-employment tax, his Social Security benefit will be lower. And if you work and grind and bust tail that whole time and all you ever do is get the money from your business, you're not partaking in compounding interest.
No.
And compounding interest at about the 30-year mark does some amazing things. Not only that, but you're leaving free money on the table. My suggestion is for everybody who doesn't have an employee, call Drake, get set up as an S-corp probably, get proactive tax planning, quit screwing around with your own bookkeeping and take your business to new heights. If that's really what you want to do, absolutely. And you got one of the most affordable accounting packages I've ever seen. But while you're doing that, I would go to Vanguard or Schwab. Those are two inexpensive, good, high-protein firms. You can go to E-Trade. There's a lot of these, but I know Vanguard's got a great situation. Set up their solo 401k and at least do the 25% of your S-corp salary as an employer contribution because it's doggone great money. I'm not a huge investor in stocks, but I know I want to make money when Apple makes money. I know Apple's going to make better profits than you are. Like if we're frank about it. Now, I'm not a big Facebook guy, but I'll tell you what, buying an S&P, and this is, I'm not giving you investment advice. However, if you buy Vanguard's S&P 500 index fund, along with a retirement date fund in the year that you turn 65, and you just split your investments between those two things, go talk to an investment advisor, but that's not a bad way. So basically what it comes down to, here's where we fast forward to this. Let's just say you're making $100,000. You talk to Drake, he sets you up as an S-corp. Boom, he saves you, by setting you up as an S-corp, he saves you $7,600 in tax. Now what you do is you take that $7,600 and you commit that to investing in your business, but also you start saving $500 a month as an employer contribution within a solo 401k at Vanguard. And as you do that, you just invested into S&P 500 index. If you do that, you're going to be glad that you did it 30 years down the road. That's all I'll say, because while our businesses are great ROI, real estate has its enticements, it is the most shrewd thing to be diversified in your investments. So that's diversification in tax. So this would be a qualified tax deductible investment. You can't get at it. You should probably have some Roth. You should probably have a taxable account. Go buy doggone Apple and Google stock because they're taking over the world. Like, you should probably just peck away at that. That's what smart people do. You should also probably get into different asset classes. It makes a lot of sense to look at saving up for a down payment and buying a rental property. In fact, buying a property and using depreciation, having your spouse be the manager of that, hiring your kids to clean it, creating losses potentially, but using at least the depreciation and cost segregation studies. There are things you can do to build huge wealth. But at the fundamentals is always number one, look at the S-corp. Number two, you should probably do either a solo 401k if you don't have any employees. If you do have employees, you'll just want to know that there are non-discriminatory rules. Long story short, you cannot say, you pick a percentage of salary that will be made as an employer contribution. So you'd say, all right, everybody that's part of Feedback Wrench, that's a W-2 employee and full-time and meets the requirements, I'm going to make a 20% or a 5% or a 1% or up to 25% profit share, which would be 20% of my salary, of my employee's salary. And that's going to be a straight line deduction in the business into our investment account. So if you do have employees, you just need to know that whatever percentage you pick as an employer contribution, for the most part, you have to make that for your full-time employees that would qualify, because you can't discriminate. You can't just ignore it. You can't get these tax spiffs. You got anything to add on top of that?
Yeah, this is a great tax strategy, and that's why we're talking about it. But there's more to it than just the tax savings. Like, there's the employee retention component to it. Keeping your people really happy. There's hey, it's tough to hire, and you guys have a lot of turnover in the industry. And so what a better way to put on a job ad? Hey, we have a 401k. We are a legit business. It creates credibility around what you're actually doing as a business owner. And so adding those couple things, we're going to create great tax savings, but we're actually going to be more holistic as a business. We're really actually going to attract good talent, retain good talent, and make sure people are taken care of well inside of their business. We want to make a lot of money and put it away for us, but we want to help a lot of people out too. So that's a really cool component of this as well.
And if you're really concerned about, oh, I want all the investment to go to me, I just know that that's immediate, when we think small, we think like that. But when we think like the thing that's going to, especially in a service heavy business like where it's going to be really resource and labor intensive, you really want to make it so that people love living out their career with you guys. And there are things you can do too. You can create officer plans. Now, ADP has some products in the 401k plan. And if you connect with Drake, he can get you connected. Yep. ADP has some interesting things where they can help you concoct rules. You can put some golden handcuffs on people where you have a vesting schedule, or if you're investing this and they don't, then you kind of lock it up so that you need them to be with you for 3 or 4 years. There's things where if you and your leadership team, you want to offer incentives, you can create incentives around just for your executives or just for the ownership or for the board members. There's stuff you can do there. You end up paying $3 to $5 grand worth of screwing around. That's really what it comes down to. You're going to pay, not Drake either. You're going to pay an advisor to do it. But just so you know, folks, if you're a small business owner, you should be saving. You should have cash saved up. You should have operating cash saved up. You should have investments going. You should be, making investments in your business. We're going to get into that. But if you're not managing small business retirement plans, simple IRA is good for if you don't have a lot of money and you got a bunch of employees. Check that out. Talk with Drake and get you on the line with Vanguard or Schwab or whatever it is, and they can walk through that. SEP IRA and solo 401k are fantastic if you want to have high contributions. I'll end on this. There's even such thing as doing defined benefit plans where you can take, like for developers that have tons of money. If you weren't a pressure washer and you had huge years, and if you want to, you can do lots of money each year, non-tax, but it has to go to fund a pension, and the pension has to be funded like crazy because it's using debt instruments to provide that income, which is low ROI. Long story short, there are games you can play that are kind of cool. But yeah, go to performancefinancialllc.com, book a consultation, s-corp, small business plan. This is a big one. You got to take a look at it. And I'll just say, I think you're a fool if you don't have compounding interest working in your favor. Like, look what Einstein read about it. This whole idea that this thing can just hum. Are there years you lose? Yep. Do I like waiting till 59 and a half? Nope. Do I want to? But there are things within the solo 401k plan where you can take loans out of these things. You can do all sorts of conniving tax planning if you want to. So, Drake, we'll take good care of you, pressure washers. This is a fundamental though. So give us a call. We'll book a consultation.